All right, let's talk about something huge that's happening right under our noses. It's a quiet revolution, yeah, but it's completely changing the game for property ownership. We're talking about technology that can take a massive skyscraper, chop it up into tiny digital pieces, and let you buy a share with just a few clicks. It's about turning locked up, untouchable assets into a liquid global market.
So here's how we're going to break it all down. First, we'll look at the old, broken system and why it just doesn't work for most people. Then, the solution, tokenization. We'll get into the nitty-gritty of how it actually works, check out some real-world examples that prove this is happening now, and finally, we'll look at the future, the incredible promise, the very real risks, and what's coming next.
Okay, so first things first, the problem. Real estate is the single largest asset class on the planet. I mean, it's massive. But for pretty much everyone, it's this exclusive club that's incredibly hard and super inefficient to get into. I mean, think about this for a second, because it's kind of wild. You can buy a share of Apple or Google in, a few seconds on your phone? But buying a tiny slice of the building you're sitting in right now? Forget about it. You're talking about a mountain of paperwork, sky-high costs, and a bunch of middlemen. It's a system designed to keep most of us out.
And this number really drives the point home. 12 years. In the US, that's the median time a homeowner stays in their house. It just screams sluggish market. It means your money, your capital, is just trapped for over a decade. There's no flexibility, not for owners, not for investors.
And here's the real bottleneck at the heart of it all. The settlement time. Actually closing the deal. A traditional property sale can take anywhere from 1 to 3 months to finalize. With tokenization, we're talking instant, T+0. That isn't just an improvement, that's a complete game changer.
Okay, so that's the problem. It's slow, it's expensive, it's exclusive. Now let's talk about the solution. How do we build something better? Well, this is where tokenization comes in. This is the technology that's going to unlock all of that trapped value.
The big idea is actually beautifully simple. You take a real physical building and you basically turn it into digital stocks, little pieces of ownership that you can buy, sell, and trade on a market that's open 24/7, just like the stock market.
And when you put the two systems side by side, wow, the transformation is just staggering. Look at this. The minimum investment drops from, say, $50,000 to as low as $50. Market access goes from being stuck in your local area to a global 24/7 exchange. And transparency? We go from opaque, private deals to an unchangeable public record. This is a total reinvention.
And let's just focus on this number for a second. $50. That's what really democratizes real estate. The fact that you can invest in a high-quality property for less than the cost of a nice dinner, well, that opens up this entire asset class to a whole new generation of people all around the world.
So this all sounds great in theory, right? But how does it actually work? How do you go from a physical building with a dusty paper deed to a secure digital asset on a screen? Let's check out the blueprint. It really boils down to 3 main steps. First, the property gets put under a microscope. It's valued, the title is checked, the whole 9 yards. Second, a special legal company is created. It's called a special purpose vehicle, or SPV, and its only job is to own that building. And third, that company issues digital tokens, which are basically legal shares in the company that owns the asset. Now, this SPV is the absolute key to the whole thing. It's the legal bridge between the physical world and the digital world. Think of it like a legal wrapper. Since you can't put a physical deed on the blockchain, you wrap it in this company. So when you buy a token, you're buying a legit, legally recognized piece of the company that owns that one single building. And the technology itself is incredibly smart. You have these token standards that literally build the rules, like who is allowed to buy or sell these tokens right into the asset itself. This automates all the security and compliance, making sure every single transaction follows the law without needing a whole team of lawyers to oversee everything.
Okay, so this is not some sci-fi future we're talking about. This revolution is already happening. So let's look at some of the landmark projects that have taken tokenization from just a cool concept to a real-world reality.
And we'll start with a big number, $681 million. That's not the size of the whole market. That's the value of a single skyscraper in Osaka, Japan, that was tokenized by one of the biggest banks in the world. This project, which was run by the financial giants MUFG, is a massive proof point. It shows that this technology isn't just for, small houses. We're talking about institutional-grade, trophy assets being brought onto the blockchain and traded on a regulated digital exchange. This is the big leagues.
And it's happening in the residential space, too. You've got platforms like Lofty, which has tokenized over 150 rental properties and even lets the token holders vote on big decisions like repairs. Then you have Realty, which lets you take your property tokens and use them as collateral in decentralized finance, unlocking even more value. And then there's this one, right in the heart of the financial world, New York City. In late 2023, the hotel on Rivington officially became the first building on that famous skyline to be tokenized. That is a huge milestone and a major signal that this is going mainstream in one of the most important markets on Earth.
Now, with all of this incredible promise, it is so important to take a clear-eyed look at the road ahead, because it comes with both amazing potential and some very, very real risks. So let's be clear, this isn't foolproof. Things can and do go wrong. We've seen ownership disputes where tokens were sold for a property the platform didn't even legally own. We've seen projects get blocked because the tokenization violated an existing mortgage. And of course, there are tech risks, like security exploits from bugs in the code. Success all comes down to making sure that connection between the digital token and the real-world legal asset is absolutely ironclad.
But even with those risks, the momentum is just undeniable. I mean, when Larry Fink, the CEO of BlackRock, the world's largest asset manager, says that the entire future of financial markets is tokenization, you pay attention. This isn't a niche idea anymore. It's seen as the inevitable next step for all of finance.
And the projections? They absolutely reflect that belief. Analysts are forecasting a market for tokenized real estate that could be worth up to $4 trillion by 2035. That is a staggering number, and it points to a massive shift of capital into this new digital world. Which leaves us with a final thought to chew on. The next time you look at a city skyline, what are you going to see? A collection of static towers made of steel and glass? Or are you going to see a dynamic, interconnected network of programmable assets owned piece by people all over the world? Because that's the future tokenization is building right now.